Well, here we are, middle of December 2023. What a year to look back on. Also, what a 60th anniversary to look back on. The past two episodes, I've talked about the 60th anniversary of the JFK assassination. And then after that, the 60th anniversary of my high school here in town, Rio Americano, on the American River. And and last week I talked about the 60th anniversary of the song Louie Louie by the Kingsmen. And all of those things are components in history that are very important, I think, to today, to where we are now. So I love studying history, especially local history. And that brings up the topic of which local Wall Street legend, not Richard Wyckoff, I've talked about him before, okay, but who's a legend on Wall Street today, originally from Sacramento. Now, Richard Wyckoff was from Manhattan and moved to Sacramento. Now I'm asking about someone who was born in Sacramento and actually relocated to Texas, but is part of what's considered the biggest and most successful firms in America as far as finance. And that person is Charles Schwab. It was 1975, I think, when the office officially opened in Sacramento. But he started his business 60 years ago as far as an investment service. He started a newsletter back in 1963, and that led to him forming a brokerage firm. And it became a very legendary brokerage firm because it is a big, played a big role in free online trading. And that's what a lot of people have done during the pandemic. They jumped aboard because they knew about their favorite companies like either Apple or Google, Tesla or Facebook. And so they invested in those companies. And then they started investing in other what are called meme stocks. What I'm talking about are what's called retail traders. That's anybody out there, in Consumerville can be called a retail trader. In other words, someone who trades stocks that doesn't have a license or any kind of financial credentials. Anyone could do this. And a lot of people jumped onto Bitcoin and crypto. Now that hasn't played out the way people, the way dreamers said it would. They said, oh yeah, it'll be over 100,000. And today, if we're only talking about today, December 15th, 2023, it's like it's less than half that. It's like around 42,000. It's only gotten up to 68,000. So all the dreamers have been wrong so far about Bitcoin. Now, I don't know where it's going in the future. Anyway, we're in this culture today where people want to work from home. Remote working is cool because you get to stay home. You don't have to freaking get dressed up and wear fancy clothes or anything. But especially if you wear a tie, it can restrict circulation to your eyes. And they've done health studies that prove that's true. So no one should be cutting off circulation to their eyes, which is like among your most important organs. So anyway, I view lifestyle and health first, then career. So I'm not somebody who is just going to move to Wall Street and wear a tie and all that just to be rich. I think money is not the top priority, but if you want it to be, that's your prerogative. I just think our culture is designed that way by the upper class, the upper class, to make everyone worry and dream about money, especially around Christmas time. you know, the holiday season, fourth quarter. Do you ever think of that? That it's really a corporation CEO's Q4 dream to have the best quarter of the year so that it makes the annual numbers look good. And then the stock goes boom, boom, boom. But the stock market is also designed like gambling, and a lot of people get hurt by it. I play the game. I've been hurt by it. I've also had gains, so I can't complain. I'm having fun learning about it. And getting back to Charles Schwab, he's the guy who created the firm that opened the door for all this, you know, free online trading. Used to be expensive commissions brokers used to make off anyone wanting to trade stocks. Like it cost $200 a trade. But by the 2000s, after the dot-com boom got everyone interested in the stock market, at least for one phase of time, it was, you know, a booming market for a while. You could have created your own website and then put it on the stock market, and a bunch of fools might have put money into it and then lost all their money. That's how that game worked in the 90s. You just had to get in, take your money, get out fast. Well, online trading actually, I mean, it can be a career. It can be something that actually does bring you wealth, but you have to be very careful with it. It's something that requires what's called risk management. Without a risk management strategy, the market probably will eat up all your money if you trade a lot. If you just throw money into a stock, like one stock, and then let it do whatever it does for 10 years, well, then you might see it grow like exponentially. But at the same time, most stocks don't do that. Just be aware of that. Most stocks do not win in the end. And the average life expectancy of a corporation today that trades on the stock market is about 20 years. So I've done a lot of research on this, and I think it's fascinating. It's as fascinating as my research on music history. So it all kind of ties together. Now, going back 60 years, the JFK assassination, that was one of the few times they closed the stock market while it was normally scheduled to be open. Another time was 9/11. Anyway, the stock market is like a merry-go-round or a Ferris wheel, however you want to think of it. It keeps going in circles. Like the market goes up. There are actually waves. It goes up and then down, up and then down, up and then down. So that's why they say buy low, sell high. But how can you figure out the lows and the highs? Because sometimes you buy low and the stock goes lower. So it's kind of a funny game. Robinhood also offers like trades. But the difference is Robinhood, that company is not really the same kind of broker. I mean, they take your order and then they sell it to a bigger broker, and that's how they make their money. Whereas Schwab is its own broker, and they just bought TD Ameritrade recently. Schwab was also the first broker in the big banking world to offer 24-hour quotations. In other words, there's certain commodities you can buy at all times, like gold. By 1984, Schwab actually was acquired by Bank of America for $55 million. But just a few years later, 1987, Schwab bought back its company from B of A for $280 million. So that's kind of like selling low, buying high, but it's worth a lot more today. The company started offering financial advice in 1994, and it began its online trading in 1996. So an interesting thing happened in the stock market this past week that you should be aware about if you're a trader. and that is the way the market works is the media plays a big part of it. That's what no one ever talks about, apparently. But since I have a career in the media, and I've studied the history of media and the history of finance, you know, I see where those paths cross. And so this week I was I keep a calendar of what happens in the financial world so that I can learn how the stock market works. You know, and like I said, it works like a circus, like a Ferris wheel or a merry-go-round. Things just keep going in rotations, kind of like the music charts. You know, songs go in rotations on radio stations. You keep hearing the same songs over and over and over again. Well, the same things repeat in the stock market over and over again. Like they hit a low price, then a high price, low, high, and it kind of stays in the range. Well, on Wednesday, one of the biggest drivers of the stock market is the Federal Reserve. Whenever the Fed chairman makes a speech, that usually moves the market one way or another. So like they're at the top of the food chain when it comes to finance. So what they say has a lot of impact on the market. And so on Wednesday, Fed Chairman Jerome Powell made a speech, and he made it clear that it's too early to celebrate, but he hinted that they were going to stop raising interest rates. And, you know, big players love to hear that because that means they don't have to pay as much to borrow money to put in the stock market. See, if you make the interest rate 0, then they get to borrow money for free. But if you make it 4%, they got to give something back to the system. So that's been making the market rocky all year, is all this talk about raising interest rates. And just to recap on why that's important is during the Obama years and even the Trump years, the market just skyrocketed up, 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 up. And that was because the Fed had lowered interest rates to 0%, okay? That was free money to big players. Okay, and then starting with like COVID and the pandemic crisis and the supply chain crisis, the Fed was trying to counter rising prices like inflation by raising interest rates, making it more expensive to borrow. So the Fed says that on Wednesday. He says, he hints that he's not going to raise rates anymore. But he says that it's premature to celebrate. And then the media pretends that he didn't even say that, like there's no warnings, and just said in the headlines, oh, Fed's going to be cutting rates soon. And so the market rallied on that news, that phony, bogus news. And then on Friday, one of the Fed members came out and said on CNBC, well, yeah, we're not talking about cutting rates anytime soon. Then the rally ends, stocks taper off. So that's how the market works. The media plays a big role in it by hyping up stocks and stuff like that and trying to get people excited about the stock market. That's how bubbles get big, like Bitcoin has gotten big that way. And it's going to pop someday and people are going to lose a lot of money and they're going to be sad. But it's just important if you play the game that you know how it works.